Great to have you on the program, Brian and Mackenzie Crabtree, the realestateexperts.com. That's the site more about us, the site for you if you're thinking about selling your home or buying a home that's really designed to make that process smooth and easy. Point and click, add to cart real estate. It's such a hassle these days, and we've designed a website that'll keep you up to date and think for you. myatlantahomelistings.com. You can also find our mortgage partner there who does a fantastic job of helping people navigate the troubling world of mortgages this day and age. Joining us now on that, Kevin Gleason, Brightpath Mortgage.
Hi, great to be back, Brian.
All right, so what are you seeing with interest rates right now? I mean, it's been a little bit volatile. Rates are going up. The economy's better. Are rates really rising? Are they stable?
You were starting to get nervous, weren't you?
What's the lay of the land?
Yeah, I mean, they still just kind of keep inching a little bit up. We haven't seen a big jump. Of course, over the last year, it's been consistently rising, but it'll trickle up and then it'll slow down for a second and then it'll trickle up again. So they've been consistently rising now for about a year, a little over a year.
So we've been in the 4s, 4.5, something like that for a 30-year fixed for a good credit score?
Yeah, that's about right. Maybe 4.65, but we're right in that range now for a 30-year.
Is it reasonable to think that by the end of the summer, they're probably, if they keep going at the rate they're going now, 5%, maybe 5.5%, we could see that at the end of the year?
Well, I mean, and on some of them now, I mean, if you start getting to where some of these low down payments and something a little bit more risky, then you're seeing the low end of 5 now on a couple that I've done recently.
And so you got a little bit more risk, a little less credit score. They're already in the 5s, so that's not out of the question at all. So how is that?
No, we.
Just a quick question: how is that impacting what you're seeing? Because Brightpath's a big company. You do a lot of loans under Brightpath's banner. How is that impacting the amount of people that are pre-qualifying, getting pre-approved, their price points? Is this creating this 1 point rise over the last year? Is this creating any sort of an issue that's new that you've been facing?
I think the only thing different now is really resetting the expectations.
True.
Somebody that's been doing this for a while, even a buyer, if I take a new call, that buyer may not jump on it today because they might be sitting at home getting ready to sell their house. They're in a 30-year fix that's 3.5%.
Right. There's no sense of urgency, you know?
Right. And then you do a pre-approval for that person and you tell them it's going to be 4.625. And whoa, they kind of want to think about it a second. But the volume in general is still very high. But the turn time from that initial call to that person getting going, it might take them a couple days or a week or two to digest that information, as opposed to a year and a half ago, and we're at 3.5.
We're talking to Kevin Gleason, Brightpath Mortgage here in Atlanta. You can apply right on our website at myatlantahomelistings.com. He's on the main page. That's how important the lending process is. You can apply right there straight to Kevin Gleason.
So we were talking before about the $300,000 buyers. We've been talking about this since last week, how when they go out, they are in multiple offer situations. And so it's very important to me, it's very important to them that they're already pre-qualified and they kind of know what their numbers are going to look like. Can you tell us at $300,000 with no HOA, with $2,000 in taxes, like what kind of a payment is that today? And if rates go up to like 6, I mean, how much of an increase are we talking? Is it like $100 or like $500?
I mean, it could be a pretty big jump. I mean, I did probably grab my calculator for a $300,000 loan and see. But no, I mean, it can be substantial. I mean,
it could really push somebody out of the market, right?
Well, on $300,000, I've got the mortgage calculator up at 4.5 right now. That doesn't count the $2,000 in taxes or anything, but that's $1,520 a month. If it goes up another point, that is $1,703. So that's $180 a month. I've done the math on that specific number before. It's funny you use $300,000. It's about 11% downward pressure on what they can afford. So if you could have afforded at your top $300,000, now it's like $270 something.
Right.
So that's
right. So it starts to decrease your.
That's kind of
power.
the answer. Yeah. I mean that's. Are you seeing that scenario play out a lot where it's people's?
Well, I think what the scenario I'm seeing is, like I mentioned just a second ago, it's somebody that's sitting in a 3.5, and they're seeing that payment difference. But again, it's not preventing that person from going forward. It's just slowing it down because now they'll stop for a second and then they'll go in and they'll talk to Mackenzie or they'll talk to an agent and they don't realize that rates have come up a little bit, but more importantly, there's a lot of buyers out there. So it's not a process of, hey, I want to delay it. They go out there and they see, okay, wow, there's 4 offers on this house. Hey, we like this one. There's 5 offers on this house.
Yeah,
And
prices
So the rates aren't.
prices are going up and so are rates, and that's really not good for buyers that wait. If they need to get into a home in the next year or two, they're not going to find a better time than now. I think that's a safe bet.
I mean, we're seeing days on market like 1 or 2 days, honestly.
18 average for the average price. 18
And
days.
that's like an
unprecedented.
as-is tough sale where you're like, really, Mr. Seller, you're going to sell it like this.
So
Yeah,
before the rates came up, Kevin, were you seeing people, if they were approved for 300, that's their max, or 400, that's their max? Were they spending all of that usually, or were they staying a little shy of that? What were you seeing before rates started going up?
I mean, I think really, I don't think the rates have impacted the purchases that much. The people that are going out there, they're still doing it, just not as quickly. But I mean, there's still. I was just reading something the other day where it talked about, and you might be able to Google it or look it up, where they're projecting population in Atlanta, 9 to 10 million by the year 2040. That's a lot of new people moving here. So I think a lot of people are realizing, coming in from other cities, cost of living here is still cheaper. You can still buy a lot of house here for what you can in Chicago or New York or Philadelphia, and it's still just that seller's market. Rates are still coming up. Home values are still going up, and it looks like they may trend that way.
Yeah, I think for the next couple of years anyway, below 500,000 Metro Atlanta wide, we're going to continue to see prices at least stable, if not completely escalating. I guess what I was getting at in the previous question is before we saw rates going up, when they were 3.5, 3.75, if someone was approved for a $300,000 mortgage, as an example, were you seeing them spend all of that money a year or two ago? Approved for 300, they're buying a $300,000 house, or were they buying like 250 to 275? What has been the trend prior to the rate increase?
No, I think that most of the time people will use, they kind of have a market, an idea of what they want in their head, and they go into it. I think now that people are just having to reset, they want to say, look at something that's 300. They get out there and they realize that 300 just doesn't do what they thought it did. So now they're looking at 350.
So that would indicate that historically, up until now at least, we don't know what the future may hold, but people haven't been spending everything that they could possibly afford to the max, which is a good thing.
Which is different, right?
Which means that basically there is some room for rates to go up, them still to afford the house they want, and for market prices to rise for at least the foreseeable future. That's kind of what I was stabbing at, is where people just buying everything every dime they could afford a year ago at these lower rates. But I think you're saying basically they're buying now maybe a little more than they were, but they had the room to do that from a credit standpoint, even with the rates increasing.
Yeah, I mean, and a lot of the buyers, I'm not seeing, I guess I see your question now, I'm not seeing as many buyers that are maxed out on their debt ratios as I did a few years ago. And I'm not really sure of the trend there. I don't know why. I can say that a lot of, I know maybe the more, I don't want to say qualified borrowers, maybe wages have come up.
I think
but last year...
I think that's what it is. I think that we've actually seen wage growth in the last 2 years for the first time in 15 to 20 years. And I think that is what's driving the rates up at the same, because we can afford to come up in rate. We don't want to, but we can afford it. Prices are coming up, and yet people are still capable of affording it due to income increases and to the fact that they weren't buying every cent that they could buy. And that means we got a very healthy market, at least sub 500,000.
Well, I'm telling buyers too, let's say that, they're looking at 300. I'm like, expect to be searching around 275 and expect to go over that with a full price offer. And so that way their expectations are different rather than going in at a 300 and offering less. You know what I mean?
Yeah. We're talking to Kevin Gleason, Brightpath Mortgage, brightpath.com in Atlanta. If you want to learn more about them, you can apply directly. We get a lot of people, they'll email us, what's that guy you had talking about mortgages on the radio? You can just go to myatlantahomelistings.com. You're always welcome to email us, but right there on the page, on the main page, scroll down a little bit, is the Apply Now button. So, Kevin, are we seeing lending standards loosening any? It's been pretty tight, pretty high credit for the last 8 or 10 years. What's the lay of the land if someone's had a short sale foreclosure in the past, lower credit score in the 600s? Are they getting a little more loose on that lending, or is it still pretty tight?
I mean, it's still pretty tight. I think that, like I mentioned earlier, I don't know whether people are making a little bit more money It seems a lot of people are coming in with a little bit less debt, so their debt ratios are better. So as far as the guidelines themselves, I'm seeing more people that fit. I'm not having to push the parameters like we did maybe a year and a half ago.
So
that part of it's
FHA loan, though, you can go down to 600 or slightly below. They've got to document a lot of stuff. Credit up to a loan price of, what is that now, 350, 400?
Yeah, I mean, in the metro area, I think it's up to the 350 range.
Okay, so that's kind of,
which is help.
That's lower credit. But the standard, really, the biggest thing is proving your income. Isn't that the biggest struggle you have at this point? If they can prove their income, they can get the loan.
Yeah, improve their income and not say income, but just their debt ratios. Like I'm seeing fewer people with 5 and 6 maxed out credit cards as I did a few years ago when they would call in. Now it seems like a lot of those balances are paid down, so their debt ratios are lower because we don't have to add a $300 or $400 a month credit card against their debt ratios.
Yeah,
having that removed helps out.
Yeah, I had people that were $200,000 and $300,000 income earners in 2005 and 6 as a household, and I was sitting in there, $500,000, $600,000, $800,000 homes, and they were making $45,000 total between the two of them at that point, and they were maxing out everything, home payments behind. That was a real. I mean, it's hard to believe that's been a decade ago, nearly, but that was the condition then. Now people are starting to get back, make money, start to see the fruits of their labor pay off. The employees are giving raises and bonuses. It's not, it's not kumbaya across the board, but it's so much better than what we could have imagined just 5 years ago. Kevin Gleason, your phone number for those folks that want to call you directly, even on the weekend. What's the best number to reach you this weekend?
You can reach me at 404-798-1176, and happy to answer any questions I can.
Kevin, great to have you here.
Thank you, Brian.
More housing scams planning to steal your equity. That's coming up next.